So what is economic activity? It is nothing but whenever there is the flow of resources. Now resources in this definition, what are resources? What do you understand by resources? Resources are nothing but assets available either with the business entity or available in the economy. Okay, so whenever there is the flow of resources to generate more resources, that is nothing but economic activity broadly. And starting a business is nothing but one of the economic activities. So this is how economic activity is correlated with the accounts. So what is the origination of accounts? Whenever there is any economic activity carried on, accounts comes into existence. Now you got an idea of what is economic activity. So we understood now that business, doing business, starting a business entity is nothing but one of the economic activities which is helping into the economy, which is generating something for the economy. Okay. Now what is accounts? See, whenever there is the start of a new business, every business has many business activities day to day, small or big. Business has the business activities. What are these activities? Very simply, purchasing of goods, employing people into the business, purchasing machinery and plant, etc. Selling of goods, processing of raw material into the machinery to manufacture finished goods, sale of finished goods. Now these are some of the business activities we know, often carried on in the business. So these business activities in accounting language are nothing but business transactions. These are nothing but business transactions. So one important thing here we got, that before thinking of accounts, we have to think whether there are any transactions involved or not in the business. Say if suppose any business organization has been started and for 6 months, 1 year, 2 year, 3 year, no transaction has been carried. So no need of accounting. Merely starting a business doesn't mean that you need accounts. You have to have certain business activities. So these activities are nothing but business transactions in accounting language. Now once the goods are purchased, if it is a manufacturing company, manufactured, then sold in the market. Whenever the goods are sold, so the profit is generated. Now this generation of profit, because of some of the business activities, is nothing but event. In accounting language, it is event. So now we got an idea of what are transactions and events. So as soon as the transactions and events are taking place into the business, the work of accountant starts. Now this is how accounts originates anywhere, in any business entity, in any business organization. Now you know what are transactions and events. Okay. Now which kind of transactions and events? It is very important to understand here is that in accounts, only those transactions and events are considered which can be measured in terms of money. For example, if I say, if any business entity is saying that we have purchased goods worth rupees nothing, can anybody can say that I have purchased a machinery worth nothing, zero cost? No, it is not feasible. So every transaction is backed by the monetary definition, the monetary attachment to that. For example, if I say, now on the contrary, I say I have purchased goods worth rupees 1000 US dollars. So it has some meaning that any business entity is buying the goods which has 1000 US dollars market value. So this is the monetary attachment to that goods and in the transaction. So only those transactions and events are considered in accounts which has some monetary definition. It has to be measured in terms of money. Unless we can say that these goods are worth $1,000, $5,000, or these services are worth this much, we cannot account. We cannot take those transactions into accounts. In other words, all those events, all those transactions which has no monetary value cannot be considered in accounts. This is the fundamental requirement of accounts. So only those transactions and events are considered which has some monetary value. So one thing we got now in the start of this lecture, now economic activity you can say business starting, it gives us the transactions and events. Now this is the origination of accounts, but which kind of transactions and events which can be measured? Money terms. Okay. Now you understand when the work of accountant is starting. What is the origination of accounts? Now let us try to understand what is the first major step of accounts. Or in other words, you can say when the accounting process starts. Now this is the base of accounts. Starting a business, doing some business activities, they are nothing but transactions. Getting something from those activities like profit, like loss, like damages, these are events happening because of those transactions. This gives lead to the accounting process. Now these transactions are to be entered into the accounting process. Now we will understand what is accounting process. Accounting process has three broad stages. The first stage is bookkeeping. The first stage is bookkeeping. Now bookkeeping is nothing but recording of the business transactions and events into the books of accounts. This is the first stage without which accounts cannot be done ahead. So bookkeeping is the first stage the accountant has to do. Now there are many types of books of accounts. In later lectures we will try and discuss. At present, just try and understand what is accounting process. Second stage of accounting process, stage 2, is interpretation and analysis.